The biggest catalyst right now for crypto isn't Bitcoin, it isn't Ethereum, and it's not another ETF. It's a piece of legislation called the Clarity Act. And eventually, if it becomes in law, it could completely change how cryptocurrency is regulated in the United States. But here's the question. Is it actually bullish for crypto, or is the market getting ahead of itself? So let's break it down. Welcome back, everyone. And over the past few weeks, you've probably seen headlines saying Clarity Act could send Bitcoin to new all-time highs, push altcoins higher, and bring trillions of dollars into the crypto. But most people haven't actually explained what the bill does. Okay? Today I'm going to break down what the Clarity Act is, why the market cares so much about it, and what the latest developments mean for crypto investors. Alright? So what is the Clarity Act? Okay, the Clarity Act is designed to create a clear regulatory framework for digital assets in the United States. For years, one of crypto's biggest problems has become uncertainty. Right, projects haven't known whether the SEC or the CFTC would regulate them. Okay, exchanges haven't always known which rules they needed to follow, and investors have been left wondering where certain tokens could suddenly be classified as securities. The Clarity Act aims to remove much of the uncertainty by defining which digital assets fall under the SEC and which fall under the CFT. So basically, if you go up, I'll put all the links in the description, but essentially you can read all about the CFTC and then the SEC over here. Okay. So that will be in the description. So why does this matter? Markets don't like uncertainty. Institutional investors especially don't want to invest billions of dollars into an industry where regulations can change overnight. If clearer rules are established, it becomes easier for asset managers, banks, hedge funds, pension funds, and large corporations to participate in cryptos with more confidence. Okay, that's one main reason many investors view legislation as a potential long-term positive for the industry. So, recent news: over the past week, there has been a significant movement around the bill. Negotiators reportedly made progress over several disputed provisions, including ethics language, bringing the legislation closer to potential Senate votes. However, key negotiations are still ongoing, and the bill has not yet become into law. At the same time, there are also reports that the Senate may miss the original timeline before the summer recess, meaning further delays remain possible despite recent progress. So while momentum has improved, investors should remember that legislative process isn't finished. So why has crypto reacted? Whenever the market whenever the market sees progress towards regulatory clarity, investors often become more optimistic. Okay, so you can see over here in the past, let's have a look here. This is ETF data. Let me just go to current. There we go. You can see in the past couple of weeks we have seen more ETF inflows, right? So what could happen next? There are two scenarios. Scenario one: the Senate reaches agreement and eventually passes legislation that would provide a more permanent legal framework for much of the US digital asset market, something many in the industry have been seeking for years. Scenario two: the bill faces additional delays or fails to gain enough support. In that case, crypto markets will likely continue operating under the existing regulatory landscape, with uncertainty remaining a major theme. So my thoughts: from a trader's perspective, I think the Clarity Act is important because regulation often shapes long-term confidence. That doesn't mean crypto automatically rallies the moment that there's positive news. Price will still depend on liquidity, macroeconomic conditions, interest rates, and overall market sentiment. Okay, you can also see with Ethereum ETF over here for the past couple of weeks / months, it also has been quite positive, literally last week. So that's kind of my thoughts on the Clarity Act. With looking at, let's have a look at Ethereum. I do want to speak about, there is this key zone that I'm watching right now for ETH. We have just broken out over the key level, which is very, very important for me as a trader, right? So what I want to see is, as long as we hold this 4-hour level above the zone, I still think that there's potential upside for continuation for Ethereum. And yeah, you can see our price took out the previous 4-hour low. It also took out daily, no, it just flipped bullish, right? So I do think that this is a positive sign for Ethereum, and I do think that we can go higher, okay? But over the longer term, this is more short term, right? This is a 4-hour time frame. But in the longer term, having clearer rules could make the US crypto market more attractive to institutional participants, right? So that's why this is one of the biggest stories I'm watching over the coming weeks. So what do you think? Does the Clarity Act become the biggest catalyst crypto's ever seen in years, or do you think the market is pricing in too much optimism? Let me know your thoughts in the comments. If you enjoyed the breakdown, don't forget to like and subscribe. And I'll keep you guys updated as more news develop on the Clarity Act and what it means for Bitcoin, Ethereum, and the broader crypto markets.